morning. Good morning, everybody. How's everyone doing? Good morning, Chris, Corey, Shadow, Benton, Tyler. How are we all today? See if we can get us one. Let's check this opening range gap here. Oops. We had the close up there. We opened here. Just going to throw a fib on here. All right. So, yeah, hopefully I get it something today because price delivered pretty well down here. So what I'm waiting for, this is actually going like it should, in my opinion. So I'm waiting for these highs to get taken. This is kind of the move I'm looking for. So if I have buy side liquidity up here, I would like to see the manipulation down at the open. And what I want to see is it run up these highs. After it runs up these highs, then at some point we'd be looking to probably trade back down in this range. This is our morning range here. From this low to wherever the high, the stop hunt. So we're going to have a stop hunt up here. This is what we should have based on what I'm reading. The 15-minute chart. We had a lot of accumulation up here overnight. We had this run down. Came back up. Left this little fair value gap here. We had this drop with this fair value gap. And there's a bit of a, if I go to the 5-minute, there's a bit of a smoothness up here as this drop happened. But we delivered pretty well to the downside. And now we're leaving this kind of smoothness up here, these relatively equal highs, right up here, this buy side into this 15-minute fair value gap. So I'm thinking price could, because it looks good down here. Price could deliver up through these into this 15-minute gap. I don't know if we would reach all the way through it to go to this buy side. This upper portion up here, we could, but that's kind of my analysis for now. Let's see. Let's drop back down to the 1-minute. So just now we did reach up. This is this purple line is the halfway point of the opening range gap. So I just threw a fib on it to make it easier. It hit this quadrant here, this lower quadrant. So let's see. We may get a move, and before it takes that buy side. So what we're looking for is before it takes this buy side up here, we need a manipulation down. So if we need that manipulation down, it very well could trade all the way down here. And I marked out this volume imbalance. It could trade all the way down here first as part of the manipulation for the day and then run up here. We have that 15-minute fair value gap there too, so we'll see if it even trades below that. Ultimately, though, on the daily chart, let me show this because we're bearish for sure. So, like on the daily chart, we ran up, made that all-time high, dropped down, leaving this fair value gap right here. And then we pulled back up, and if you look right here, this is an order block. Price came right up to that order block. Dropped again, took this low, barely, but took it, leaving another fair value gap right here. After that fair value gap, and it taking this low, price ran, pulled back up into this fair value gap, and then watch this. From there, this order block, you measure the body, the whole body, the middle of it, price ran right up to the middle of it here. Hit it. And now it's dropped. This yesterday where I said we could see an immediate rebalance yesterday where it won't leave the fair value gap open, it did that. It immediately rebalanced. So now overall I'd be bearish for it to run through this low here and then ultimately come down take out these lows and then these lows. There's so much sell side liquidity. But, you know, that's over time, of course. Go back to the 1 minute. There we are. We hit the midpoint. Yeah, see shadows here. Okay, so yeah, so from here, if we don't have this rundown first, so basically I'm looking to see where, because now we're engineering some sell side liquidity down here, right? So like ultimately, I believe at some point we're going to come down here to these lows, the low of this opening pre-market range here. So if I measure this high, measure this low, we have equilibrium here. And what I want to see first, what happens is, does it take these highs first and have a stop hunt and then drop, or are we going to see a manipulation down and then run up through it? I'm kind of leaning more towards we're going to see a run up, stop hunt, and then drop, just because we're bearish overall. But we'll see. We just have to wait and see. Hey, it's your birthday today, Chris? Well, happy birthday if it's your birthday. Hey, Rich. Good morning. Yeah, we have our first presented fair value gap here. I want to see if this turns into an inversion. So at the moment, just waiting. Because, yeah, we have equal highs, equal lows here on the 1 minute. Let's go to the 5 minute. Right now, same on the 5 minute. We have relatively equal highs, relatively equal lows. So what did I say the other day? It should take out both. It'll take out one and go to the other. And today's new day opening gaps are right up here as well. Actually, I don't like the fib here. That kind of throws me off. Too many lines. So let me go back here and just mark. Just going to mark it how I normally do. That's at 372.50. There we go. So, yeah, you see how we reached up, created, engineered some more buy-side liquidity up here. So we're taking these lows. We have this big, look at 8 a.m. There was a lot of news at 8 a.m. Big imbalance here. Price very well could try to rebalance this down here now. I mean, and then run up. See, that's what I was saying. We could have this manipulation down here first and then run up through the buy side. And it may not ever come back to that buy side because we're overall bearish, but let's see. But with these highs here and these lows here, I'd be more willing to wait to see if we run these lows and then go ahead and take these highs, because we're gonna have to have a stop hunt somewhere. Typically, the run all the way down will happen after we have the stop hunt. But we're bearish overall, so. Yeah, and see days like this where, like, yeah, I have a good framework here, in a sense, and I know it should run these highs, it should take these lows, but you just got to wait and see what it decides to do first, right? Because like you don't want to jump the gun, and we know when you have both sides of the market, it's gonna take one and go to the other. So just patience. Now we don't have any more news until this afternoon, the Fed meeting minutes at 2 p.m. So it's not the same as the Fed funds rate. Fed funds rate is going to be the one I don't trade that day. Meeting minutes just explains what their decision. It tells you why they made their decision on the last rate decision. All right, so here's where it reached down, took out these lows. And now let's see if it wants to make its run to do a stop hunt above these highs. So see, this is where, like, if you are very confident we're going to run these highs, which I am, you could look for an entry somewhere to go up there. And if there's no entry on the 1 minute, you could drop to the 15-second and look for one. I'm not taking it. I'm not looking for a run above this as a trade. What I would prefer is to let it run that stop hunt here and then look for the drop to come down to this low here. Not saying I would take it all the way down, but that's what I look for. And we just engineered some more sell side liquidity right here. With these relatively equal lows. So if we do run that stop hunt, this more than likely would be my target. Hit that first presented fair value gap and reacted really well off of it. Into this, we need to see what happens here, because this could be the launch to run those highs. And on the 15-second, let's see something here. Okay, never mind. It overshot it. Well, you do have this inversion right there. I haven't taken a trade this week. Actually, what was it, yesterday? I took a trade on my live account for the 1150 macro. I was at the computer and saw I took a 100-point trade. It was really nice. Let's see if I can find that. Yep, here we go. That was yesterday. Took the 1150 macro delivered all the way, almost like right now, how we're looking right now. It was really nice. Because right now we have that kind of same structure down here. So we'll see. I'm really expecting it to run these highs and give us a stop hunt up there. And then that's where I would be looking for an inversion, a market structure shift, breakers, something. to come back down. See if we take a quick glance at the 1 hour. We're in a 1 hour fair value gap right here. We're just pulled up into. Yeah, I don't trade before. Look for a trade entry before 950. After 950, we're a go. So yeah, I mean the 950 macro could, like you see, we're still ran up, couldn't make it up there, so we could see a delivery down or up first. That's basically what I'm waiting for, right? I'm waiting for, does price want to run down here first and then take these highs? Or will price come up, take these highs, have a stop hunt up in this area, and then drop? So I'm just waiting for that. That's going to be basically what I'm doing today. And the good thing is unlike the last 2 days, it didn't do it before the open or right at the open. So I may have an opportunity to take a trade. And this is all of the chopping up, eating people up right now time, because people are breakout traders, may have shorted here. You know, support and resistance traders may have went long here at the bottom. There's a lot of different scenarios that people could be getting chopped up right now and eaten up. So that's when we just wait. Wait for it to do what we think it should do. And my sinuses have been getting me lately. This cold weather, and then, you know, out here in Houston, we'll go from 80 degrees to 40 degrees in hours. So a little bit of sniffles. All right, we have 1 minute for the 950 macro. All morning. Yeah, Texas. Yeah, that's just Texas. Still seeing you guys up there. Neck pop. You guys up there in Dallas area, y'all still looks like y'all gonna be getting some heavy ice or snow or both, from what I see. I'm a little jealous of that. Snow maybe tomorrow. Yeah, and I keep seeing, actually, also there's another wave coming, like towards the end of next week. I think it was the 13th or 14th, where the big snow for Texas is gonna come. Julian, you're in Dallas, but from Houston. Nice. Which city do you like better? Do you like Dallas better or Houston better? Chris. Yeah. The time I've been to Dallas many times, I kind of feel the same. Like, been many cities around, not just Dallas, but like the Dallas metro area, Dallas Fort Worth. I haven't lived there, so I don't know, but I don't know. I could just be tired of Houston. I'll still never be a Cowboys fan, though. Juninho, hey. Bom dia. Okay, so 950 macro. Yeah, Texans though. That's right. All right, 950 macro. We inverted. See, here's the thing though. I don't have to have it take these highs for it to deliver down first. Like if it does, great. Even more reason that it'll deliver to the short side. But what I'm looking at, I mean, we're still engineering a lot of buy side liquidity up here. So what could happen as well is we could see, because we got to watch this first presented fair value gap. But I mean, at this point, I really do think we're just going to take these highs. I mean, we're too close. We're just inching up there, right? So like, I would not be surprised at all if we just see just a pop and it just take everything up here, because we're going to have a lot of support and resistance traders seeing this range from this high and this low now, and they may be shorting up here or having stop losses up here. And so I would not be surprised, like right now, people going short stops up here, and this thing just pop and take all of them out. I would not be surprised. That doesn't need to happen. Like anytime I'm saying stuff like that, doesn't mean I need that to happen or I'm expecting it. I just wouldn't be surprised. But if we have like this bar coming down right now, if we displace through and it's just obvious displacement, then, you know, likely that's when we're going to go down. But because we're always looking for obvious displacement. But at the same time, I mean, we still have to wait. Oh yes, I saw that. Your suggestions. Yeah, I'll do some video with that stuff there. So let's see. We're taking this little minor sell side right here. That was minor sell side. Let's see if it spends any time underneath there. We're likely going to have this fair value gap here. We inverted this one. I'm just going to get rid of it because it's not... I'm actually not going to short this, though. Not yet, anyways. I'm not going short right away. You still have this 15-minute fair value gap here. We have a 5-minute fair value gap here. We have this. This very well could be some manipulation as well still. I'm not... Because, I mean, it's just too smooth up here at the moment. I think we will come down more, but I'm willing. So this is so smooth up here. I'm willing to risk and wait to miss this coming down in order to get a trade going back up through these highs, because that is going to be, to me, a higher probability trade. Looking at how price has delivered back here, because it delivered pretty well back here. And look at, I mean, this is just all way too smooth up here. Here's that 5-minute fair value gap right here that we just touched. This... not that one. This potentially could be an order block here. But again, I'm waiting. Because we have 10 a.m. as well coming up soon. Talking about on the 15. Oh yeah, you're talking about way over here. Yeah, that's really smooth and nice. So that's where, yeah, right under this low. That's really nice. In immediate, that's why I mean I really, because we're bearish overall. So that's why I really prefer to see price run these highs first and do its stop hunt up here and run up this way first and then drop. Like that would be the best scenario for me. Like that would be the ultimate scenario for me. Because yeah, that, let's see if that shows on the 1 hour. Yeah. So if you look on the 1 hour, all that smoothness here, I mean, that's, and with us being bearish, I have no doubt we're going to come down through here. That 208. Yeah, around that 208 area. But because we have all this going on right now, when we do have that 2 p.m. meeting minutes, which shouldn't really affect too much the opening New York Open, but I mean it could create some not so good price action in the morning and it wait for the afternoon. But we'll see. Just got to be patient. Okay, we tapped that first presented fair value gap again. So this, like I said, this could be an order block. Let me measure it out and see if we hit almost the middle of it right there. And we very well could be, I mean, it doesn't have to take these highs. I would prefer it, and it did hit the middle of the opening range gap already, so that's good. So if it does show a willingness to go down, I mean, I'm not going to say no to it. I just got to be sure. Just got to be sure. That's all. It has to be obvious. See, right now, it's hinting at seek and destroy conditions. And that's where all these wicks keeps taking short-term and intermediate-term highs and lows, right? Like, keeps taking them over and over. And that's signs of seek and destroy conditions. Doesn't mean it'll last forever or that it actually will end up that way. But we don't want to be a participant in this right now. Nice, Julian. Last Monday, Julian, before the open on NQ, caught $1,100. $1,100. That's good. That's great. Yeah, so far right now, like my hands are literally, like if I stood up, are in my hoodie jacket right now. They're in my pocket. Because, like, I don't want to be a participant right now. And it's kind of cold in here. But we can see, so here's something to note though. I said this is a potential order block. I want to look and see if we build up some resistance at it. So here's the open, and we were building up some resistance. Obviously not anymore, but it's still valid as long as it keeps that resistance built up between the open and the midpoint of it. Obviously we're shooting up now, but like that's what you want to kind of look at as well in regards to order blocks. When we zoom out, look at that price action, just kind of meh. See, like shorting this 1 minute fair value gap would not have been a good one. But see, this is where you can get caught up in the two, like without looking at the framework or focusing on the framework. This is where you say, displaced down. Like you can get caught up in this. Displaced down, took this low. That's a market structure shift. Left fair value gap. Let me short it. Like that's being too narrow into the particular setup of market structure shift and fair value gap. That's where a lot of newer ICT traders get in trouble right there. You see how we took this low? Let's see what ES is doing. 954 made a low, 959 higher low. Okay. 40. Okay. There's no SMT on ES. Oops. I did not mean for that to happen. YM, they're actually all three fairly correlated. ES just took those highs. Its highs. So up, NQ took it. So there we go. That's what I like to see. Now, that might not be all that it needs to do, though. It may do a stop run all the way up to London high, maybe. Maybe even this buy-side liquidity I have marked up here. Yes, Trader Joe, 950 to 1010 is the macro. And then 10 a.m. is could be a reversal of the market. But this is what I'm looking for. I'm looking for this move up. This is a stop run now. We have to wait. See, this is delivering all through here. Now up here, once we have our stop run up here, that's where we start looking for inversions, breaker patterns, order blocks, fair value gaps and displacement back down, stuff like that, a shift back down. That's what I really wanted to happen. Yeah. Yeah, because power of three. So look, if we look, take all this pre-market out of the equation. Right now, we have, this can be our accumulation here. We could be looking to manipulate up with that stop run. And then we could be looking to distribute down. Obviously on a bigger scale. But, because this is the 5-minute chart. So we could be looking at. We'll see if it plays out. But again, we have, after it makes this high up here, wherever it stops and has a shift, that's where I'd be looking for that high. And this low back here, this is going to be our range. Dealing range. Here's equilibrium. Throw in my quadrants there. Okay, so here we go. Here's an inversion about to happen. Potentially. Got to include that volume imbalance there. I'm looking to see if we get an inversion. This is a good enough stop run because we're in this 15-minute fair value gap. So that's a good enough. I don't need it to go any higher. But I want to see if this gets inverted or not. Yeah, I wouldn't mind that, Benton. If we had this like a pullback and a higher high and then drop, that could actually create, form us a little breaker pattern. So it has not inverted that. It came into this down close candle. So we'll see what happens. I'm not I'm not jumping any guns here. Okay, here we go. We're definitely going to invert this. Well, shouldn't say that yet, but still 30 seconds. All right. Highly likely this is an inversion. This is the shift. So this would be a Judas swing up here. Stop run, and we should drop. There we go. Hit that inversion. I would expect it to drop now. I don't take entries off inversions, but you know I really should, because that'd be an entry right there at 379.25. That's why I should take inversions. Got a little bitty volume imbalance right there. Let's see on the 15-second. See, right here on the 15-second, we had a little fair value gap. Order block here potentially, not quite though. Yeah, we don't have fair value gap yet on the 1 minute, so still waiting. And this little volume imbalance, it'll probably pop up and hit. This could be an order block here. What is this? Oh, let me get rid of that. Yeah, we have plenty of room to wait for a fair value gap, right? Because like I'm expecting price to run all the way through these lows, so we don't have to try to call the top and get in here at the top. Although that would have been a good entry, we don't need that. You don't need that, right? Like that's kind of like an early entry where, like you could take that, but you have to expect that they might not always work because it's kind of like an early. It is an early entry, right? So like you're not 100% confirmed yet, even though the structure and everything looks good. And yeah, I like how we did run these highs on this stop hunt and did take this buy side liquidity, and we spent 0 time up there. We came down right afterwards. It's hitting this inversion, so that I erased. This is an inversion now as well, so it may cause a little turbulence there. So we'll see. See, this bar right here, it just came back up and hit the opening of this potential order block. So we'll see if we build some resistance between here and this orange line, which is at the fair value gap, inversion fair value gap. There was another fair value gap on the 15-second right there. Now we might be getting our fair value gap here. We're dropping through equilibrium though. See, this is a runaway. If we get this fair value gap and we come back up into it, this might be an area I'd be looking to short. There's a little volume imbalance right here. We may come back into little inversion right here. We have the first presented fair value gap. 349, although this would be a fairly large stop loss. But this would be one I wouldn't immediately enter if we do get a fair value gap here. But yeah. See, right here, that inversion was the best entry. 379. I mean, that's 80 points already from that inversion. Got that fair value gap on the 1 minute here. There's still this volume imbalance is on the 5 minute as well, so we'll see. Man, this might just run away. We'll see here. This 15-minute gap is still there, so it might be enough to cause it to pull back up into here. If I take a short in this fair value gap, my stop would be at the high of the bar that created it. Or my stop would have to be right up here. About 679. If it does pull back up into it. If it runs all the way through the low, that's it for me. There'd be nothing else for me to frame out or analyze, so I can't take a trade after that, unfortunately. So this goes back to what I was saying yesterday. I need more entries than just a fair value gap. Because when I call out where and what the market should do, and it happens, but I don't participate in it, I need more than one entry. Like this inversion, like I said, that's an entry right there to go short. That was the best entry. I mean, that's 100. You're up 120 points at this point if you take this short from the inversion. But, you know, it is what it is. See, we ran all the way down. There's nothing for me now. That's the downside of only taking fair value gap entries as well. Like right here. So I said we hit that order block. That was an entry. Right here. We hit the open of the order block. Drop. Fair value inversion. Drop. So like this is like I really need to refine what I'm doing. And I can't just rely on the 2022 model for entries. Because that's like 3 days in a row now. This week where I had zero doubt of where price was going, and it went, and I didn't take a trade on any of them. So, and there's plenty of entries on all 3 days. So this is where I need to continue to again today. Here's another screenshot day, annotated, and then I just have to be confident in what I'm seeing and reading because it's happening and it's there. And I just have to be okay with taking an entry that is not my normal fair value gap. Like I can't just be a one-trick pony and only look for a fair value gap. So, yeah. There we go. Did exactly what I thought and what I said. Stop hunt, ran the highs, and then dropped through the low here. Now it hasn't ran the low, so like technically, yeah, you could get in short somewhere at any of the PD arrays, but the risk is like, yeah, it should come. It may pull up into here, as long as it does that before these lows are taken. then yeah, you could short here, but then you just have to have a good risk management. Know that it could overshoot it because it could come up to this one still. Like all that, if all that happens before you run these lows, like you could do that, but that's not what I do. What I do is I was looking for the trade up here in the premium to take it to the discount. Because now, like I said, you measure this high, measure that low. That's our dealing range for the day, for the morning. Here's equilibrium. I need my entry to be above equilibrium to take it to discount. So it is what it is. It is what it is. Yeah, did anybody go short? Anybody catch any of this? I hope somebody did. Man, this got me really, because look, think about it this way. If you would have taken this inversion, yes, it's not quite confirmed. Everything looked good though. Like I had zero doubt that this inversion wouldn't hold, but there's a risk, right? There's a risk it makes a higher high and then goes. But here, 379 entry, your stop would want to be above this high. We're looking at a, 27-point stop. That's like around my normal stop anyways. So like, why not go for this? Why not? There's like no reason to not go for this. It aligned with every single thing that I said. This order block right here, entry 365. 365, right? Your stop, you'd want to get out if it closed above the middle of this midline. So 365, 75, 85, that's a less than a 20-point stop right here. Why not? Why not? Right? So here again, this is where I said you could short this fair value gap, but you risk it overshooting it and reaching back up higher to a mitigation point, which would be here, right here, mitigation. You risk it hitting this mitigation and even digging up into it some. Like, so where are you putting your stop? And are you okay with your stop there? Like, I wouldn't be. That's just not it for me. Danny did. Danny got some of the short. Trader Joe took the inversion. Man, salute to you. How long did you... Oh, you put it in there. Got in at 370.25. Took profit at 311. Beautiful. Good job, Trader Joe. Wish I would have done that. 370. Where's that? Let's see. 370.25. Right here. Okay. He got in at right around the inside the order block here. Shorted. Basically, correct me if I'm wrong, but this is my thinking of what you did, Trader Joe. You saw the inversion. It hit the inversion. And you waited for the reaction to say, yep, the inversion is going to push it down. So as it started coming down, you got in. Right around the midpoint of the opening range gap, got in, and then 311. Basically the lows of these wicks here. Nice. Danny went on the inversion as well. Benton, win rate. So Benton says he has a strategy for inversions, but the win rate is much lower. But when they do win, it's a 1 to yeah. So, and that's the thing, because inversions happen first, right? Like typically you're going to have a move up, and then it's going to, the first signal of a market structure shift is inversion of that highest fair value gap, right? So that's an inversion. So you're going to be in, if you're going short, at the highest point, relatively speaking, like usually around the highest point. So there is that risk of it coming back up and making a higher, then dropping and forming like a breaker pattern. But when they do go, yeah, you're going to have a great risk-reward ratio. But so this is one thing too. And the reason, a reason why I struggled with taking inversions last year, because I didn't know which inversions were the ones that were going to be the good ones. So it's not just that, hey, it's the last fair value gap on a trend up and it got inverted. That doesn't mean anything. What means something is the framework of, like what I was saying this morning, of we should take these highs and see a stop run before a drop down here. Like the whole framework is what said that this inversion is going to be the right inversion. I'm still not there yet to take them. Maybe I just need to. I just need to start taking them whenever I know. Like today, I was very confident. So maybe I just need to wait until I'm extremely confident in what I'm seeing. And with this, and actually the 2024 model has helped me a lot with this framework in the morning of not being so focused on the big picture. Trader Joe said, yeah, once it hit the inversion and retouched, hit sell market. Yeah. Danny said he has the same problem. Arsene, that's okay. You know, so you said you've seen the same thing I saw, just no entry. That's fine. Like the first step is seeing it. Like if you can see this, don't worry about an entry. Like, yes, we want an entry, we want to trade, right? But step one is seeing this every day. I saw it Monday. I saw it Tuesday. I saw it today. Did I get my normal entry of a fair value gap? No. So all that tells me is, hey, I am reading the market. Like I see where it's going. You are seeing where it's going. If you said you saw the same thing, that just means we need to refine some entry points. That's it. There's multiple entries. There's more than just fair value gaps. You know, like I said, we have the order block, inversion. There's 2 entries up here. We just have to see them and make sure they fit within our money management plan. I typically don't like to risk more than around 30 points. And if I do, like I got to at least get double the profit, right? In this case, I mean, there's plenty of room from any of these entries down. I mean, we're talking 100 points plus. So like, and you don't have to take it all the way down. You could take it back down to this low. You could take it back to this 15-minute fair value gap because we never technically inverted it yet. Like, there's a lot of things. And any of these points, that's the low-hanging fruit. So, look, let me measure this again. This high, this little dealing range here. High, low, equilibrium. The first low or imbalance after equilibrium is the low-hanging fruit. So, here's equilibrium. This is the first low right here. That's the low-hanging fruit. And then also you still have this big fair value gap right here, which is an imbalance. And if I pull that all the way over, that'd be actually right here would be the low hanging fruit. Technically the lowest hanging fruit, about 308 or so. So yeah, right there, boom, low hanging fruit, zero. Like you'd have basically zero heat on this. No, I mean, it went down, straight down. So, and even right here, if you got in anywhere in this area, just that low-hanging fruit, we're talking about basically 60 points. That's a beautiful day. So here is why I wouldn't have taken this fair value gap. Just like I said, it could reach up into mitigation. It could reach back up into the 15-minute. And you see it reached up, dropped, gave you a little bit of hope, and then said, nope. Here we go right back. It could come right back up into this one. And this could still be an entry. We have not taken these lows. And all we did actually is generate more sell side liquidity. So it very well, I mean, we delivered very well up here. We're not, in my opinion, going to go back up this high. We have not hit this fair value gap. So this very well, I'm not going to take it just because we already ran this up here, but we very well could come right back into this 1 minute fair value gap and drop. I'm not going to take it because this was the move I wanted. And see, the reason why I'm not going to take it, even though I believe we're going to come back up in here. We may hit this order block again, but I really believe we're going to come into this 1 minute fair value gap. We may kind of accumulate a little bit and drop. But the reason I'm not taking it is because if I took this trade and if it just so I'm wrong and it so happens to lose, that's when I get mad at myself. Like, dang, I missed this move and I took this one and took the loss. So that's why I'm not taking it. Yeah, Benton, you're right. There's a 5 minute fair value gap there as well. With that volume about, oh, so here's the other thing. it could shoot up and hit this volume imbalance as well. So it could overshoot, hit this volume imbalance. Here, let me put a little mark right there. Volume imbalance on the 5 right there. So we have this it can reach anywhere in here actually. We have this 5-minute fair value gap. It hit the midpoint of it perfectly. Look at that. Here's an order block on the 5-minute. So the opening of the order block right here. And then you would actually want to watch this entire, both of these candles here. So the midpoint, look at that. The midpoint of this order block is right above where this volume imbalance is. So they very well could overshoot, tap this, and still close inside this 5-minute fair value gap and then drop. That would be my guess of what would happen. So let's see if that happens. So that would be this area up here. To reach up, tap that, and drop. I mean, it might not, but let's see if that happens. I mean, it could drop from here. But see, that's what I'm saying. That's why I'm not taking a trade here either. Because all I would do is just get mad at myself if it does lose. ES low taken, so wouldn't take a bearish anymore on MNQ. Let's see, ES. Yeah, it did take that low on ES. I'm still bearish though, because overall the daily is fairly bearish. And NQ, I don't see any reason for it to trade back above here. I mean, anything's possible, but for me, I don't see that it would be bullish anymore. Like, see, we're hitting this, and there's too much sell side liquidity down here for it to not run through. Could be wrong, but... And you see this 1-minute fair value gap is in the premium of this morning dealing range. Right? So, you know, that could be a short. Chris, what'd you do, Chris? Were you taking trades in this mess? Or did you... I don't know what you did. What'd you do? What'd you do? Did you take this fair value gap short right here that I said I would not take? You didn't have a TDV connected to Ninja. I connected before my closing order. Yeah. You took it. You took it. Yep. This would be the one to wait for in this area. Maybe up here, maybe here. And you could take a short in this 1 minute, but you have to fully expect it could reach up to this area. So, again, if I shorted this 1 minute fair value gap, my stop would have to be above this wick that created it at 360, 369 or whatever I said earlier. 367. And then you have to fully expect price could come back up, tap this, and drop. See, now we inverted this one. We may not reach back up there anymore because we inverted this one after hitting that 1 minute fair value gap. So, inverted it here, reached back up almost to the midpoint, hitting this little fair value gap. But yeah, I think we're still going to drop and run through these lows. At this point, if you took this inversion, you'd want your stop up here, 327. But I'm still not taking it. This was my trade. I just didn't get it. And once I have my framework, I see the move, and once it happens, and whether I'm a participant or not, that's it for me. I'm done. So I'm not taking a trade. Getting coffee. Trader Joe was getting coffee. Hey, but Trader Joe, you got the move I wanted. So see, and that I'd be done. I'd be done right there. So that's it. And see, that's part of what I do. Like, I frame it out. I frame everything out. I have an expectation, and if it happens, I'm either a participant in the trade and I get it, win or lose, or if I don't get it, I'm out. I'm done. Like that what happened. Like, that's what I expected. It happened. Now I have no other. That's it. I'm done. So That's it. So now the rest is just, yeah, maybe the 1050 macro. I don't know. We'll see. At this point, that's all for me. So with that being said, I'm going to leave y'all to yourself for the rest of the day. Just don't forget 2 p.m. news. All right. Tomorrow. Oh, don't forget tomorrow. The markets are closed. No trading for me tomorrow. Markets closed. Friday is NFP. I trade NFP, so I'll be here Friday. So everybody have a great rest of your day. If you're going to keep trading, as always, trade well. I'll see y'all later.